So what we see is still we need passionate founders who have a connection with industry. The problems in agri-food haven't gone away. The topics are still there. There are still issues around labor, climate, making money for farmers, food, nutrition. These topics are still there. So I don't think those have gone away. But maybe the expectations of rapid scale and exit multiples have changed slightly. In any way, I think there's still a lot of opportunity. And in fact, in today's market, it may be even better to deploy capital. Hey, my name is Arnout. I'm principal at Rockstart, leading the agri-food fund, investing in early stage agri-food startups. We're based in Amsterdam and Copenhagen. And yeah, we back insightful founders that are at the beginning of their journey, leading them all the way through to their Series A. Hi, Alex.
Amazing. Well, very excited to have you. We've been friends for a while. Congratulations on taking this position. What's the typical check size just for our listeners that you guys typically invest at?
Yeah, thanks. Indeed, we know each other already for quite some time, and it's always good to be in a conversation with you. Unfortunately, online you didn't bring chocolates, but we'll do that next time. But so our check size is typically we start at around 100K, 150K euros to invest in really pre-seed stage companies. Then what we do is we put the early ticket in. So we really want to be the first professional investor into your company and help you on your journey. We provide a lot of hands-on support from our network, from our mentors, at a sort of a la carte menu that you can pick and choose from to support you on your journey and help you fundraise for a larger round. And the idea is that we participate in those larger rounds coming up as well. So we actually reserve quite some money to support you in your journey going forward. So that's the strategy of Rockstart. We believe that the founders are the rock stars of business, and that's why we take a supportive role.
And then tell us some of the newest deals you guys deployed in the sector and maybe some of the process they had to go through in order to get your backing.
Yeah, absolutely. So, of course, yeah, we see a lot of interesting companies passing our desk, but what we really look for is very insightful founders, people that have maybe been through a process already or come from an industry with unique insights into that industry. It doesn't always have to be technology backed, but I mean, the more, let's say, moat you have around your idea, the better, of course. With the last few investments we've made, yeah, we see exactly that. So we look a lot for passionate founders, people that really have a pressing need to solve some of the issues in the agri-food space. So we invested, for example, in Fuvi, a platform connecting farmers directly with end customers to boost the standard of living of farmers and to help them create a real business be in the squeeze. And these founders really come from the industry, come from platform building capacity, and they have this complementarity. So that's why we fell in love with this company from Norway, and we help them scale, develop their offering, develop their platform, their go-to market. And for us, we can move very quickly. If we see an interesting team, we can go in a couple of weeks from first meeting to investment. We're really not here to grind you on your financial plan because there is probably none. So we really look for people who have an understanding of what they try to do, have an understanding of the industry, hopefully work with the industry, and we can boost them with an initial check. That's what we do.
And just to clarify, you guys only making bets in European founders or this is global?
Yeah, we are European focused, and that's where most of our team is, of course. We've made a couple of investments in the US, very good ones. We also made a couple of bets in India. So we can do global, but our focus is Europe. And then, in effect, most of our network is actually Northern, Western Europe. We want to expand that to the rest of Europe as well. So as long as they're interesting people to work with, we're open for business, but that's the focus. Yeah.
Okay. So take us through what's in your mind changed from 2026 pre-seed investments to say 2021 pre-seed investments. Like, what are the type of things you guys are looking in terms of exit valuations, timeline to exit? Are you looking for maybe less CapEx heavy projects that you make a bet on? Are there some guidelines of what's in and what's out for a Rockstart solution?
Yeah, sure. So happy to, of course. I lived through those times when there was maybe a bit more capital available for startups, especially in the later stages in agri-food. I think for Rockstart, in terms of the thesis, in terms of the ticket size, the early stage investment, that hasn't changed a lot. So what we see is Still, we need passionate founders who have a connection with industry. And maybe that was different in 2021 when there was a lot more, let's say, tourists into this space who didn't know a lot about farming or about food, but they were passionate to build real businesses. I think for us, the good thing is that we invest early and we really look for people who are grounded in that industry, but who wants to create a change. And that change is still needed. The problems in agri-food haven't gone away. The topics are still there. And there are still issues around, labor, climate, making money for farmers, food, nutrition. These topics are still there. So I don't think those have gone away. But maybe the expectations of rapid scale and exit multiples have changed slightly. In any way, we invest so early that for us, the later stage exits are relatively far away, so we can, be a bit more adaptable to the cycles in investment periods. And so far, we've seen very good success. So from our initial tickets, let's say 75% of our startups reach that seed and Series A ticket, which is for us super important. And that shows also the success of our model, connecting people with people from the industry, but also with people who help you build your business plan, help you go to your pricing model, help you go reach farmers. How do you do that? What's the best way in the industry? So yeah, our model, I think, is one of the models that actually works. We're okay with an exit, which is maybe not a unicorn, $1 billion plus, but a little bit less. For us, that's still a great way to build real businesses so I think there's still a lot of
Yeah,
opportunity. And in fact, in today's market, it may be even better to deploy capital.
so what does the process look like? Can you take us through what the process will look like for somebody trying to raise from you guys?
So the process of our investment, as I said, we really want to be the first professional capital into a company. So we're looking for founders who, just left university or just started a new idea that they want tested on. We're early believers. We believe in founders, we believe in solutions, and so we try to help them. Our process, as I said, can be so quick that founders are really appreciative also of the support that they get after that initial investment has been made. Of course, we want to be a part of their journey, so that means the relationship is very close. It's very personal. So, in that sense, we look for, of course, big market size. We look for good teams. We look for a bit of technology behind what you're doing. But our due diligence is relatively light. Connect you typically already with some of the mentors that we have. So from our industry expert network or from other networks to get a touch and feel around, okay, do you think in the right way? Do you want to build this for real, or are you doing this as a side hustle? We want people that are focused and demanding, and we are demanding in that sense as well. So that's our process. It's very, very light, but very detailed still.
What are the signals you're looking for? So it sounds like signal would be significant market size, commitment to the project, personally committed to your own kind of life story, and also from the business side. What other signals would if a founder is listening, they'll say, "Oh, I think I should apply."
Yeah, I think it's important to bring some unique insights from the market. And that's a signal that's maybe a bit vague. But of course, when you're coming from a specific industry, you might not realize how much of an insight you already have in that industry that other people might not have or other founders. There might be initial traction already with an idea that you had, which you were building on the side somewhere, or you found because of your network, your unique network. There's some, let's say, uniqueness. That word is coming back all the time. These kind of signals are important. You're not completely blank when asked a question around your go-to-market model, or, for example, the reasoning behind how you see your capital needs going forward in your venture. These kind of things are important triggers. And an openness to learn. Coachability is, of course, also important. That sounds a bit patronizing, maybe, but I think for founders, it's important to be open, to create a network, and to open as many doors as you can, and have a team that is a bit complementary in that sense. So one would be the hustler going after the market, going after customers, a bit like you, Alex. The other would be the more technical person building the product, making sure that everything works behind the scenes. So you need a few different characters in your team. We're not team builders. We're not a venture building operation. We really back you with professional capital, and we'll behave like an investor. We are a professional fund to get returns. So That's the type of founder that we're looking for.
So you usually, first of all, thank you. Usually when you have like a later stage fund or even a seed fund, they're looking at like a power law dynamic where every investment should return the fund. That's a kind of, I guess, so you're taking a few shots at goal, but the idea is the shots you're going to take on goal, each one of them should have the ability to return a fund. But Rockstar makes like 50 shots on goal a year or something like that. Am I wrong? I think it's like 50 on goal, right? Or is it not 50?
It's a little less. I mean, from the agri-food fund, we make around 15 investments a year, but still we're indeed very active. Yes.
So question would be like, if what is the return on investment you're looking at at that stage of deployment? And that will allow me to understand how much liquidation I'm seeing I need to get you guys to the number you have. Because there's probably like, I'm guessing you're probably investing like a pre 1.5, 1.25 to pre 2. That's probably where, you guys are at. I'm guessing that's the typical terms. Would that be correct?
So the initial terms for startups, I mean, yeah, evaluation of startups is more of an art than exact science. We're looking for early stage valuations for sure. We're quite flexible, but if we would have to put on a valuation on your company, it would be based around the team, how much traction you already have, how far you are on your TRL, sort of these kind of indicators to give you some idea. For us, what's most important, of course, we are a professionally run fund, so we're still looking for the outlier returns, which are probably through power law. So in our last fund, we will do around 40 investments in total. Out of those, we rank these startups according to very quantifiable measures. And along these metrics, we also see which companies are advancing best and are very capable in raising next rounds, getting to that next inflection point on execution, all of these elements. And we back the winners in our portfolio with additional capital. Not to say that as I said, quite a few of our companies are very successful in getting through those later stages. But for us, we don't have to wait with every company until they reach $1 billion valuation. We can already sometimes exit at an earlier point in time when we have a decent exit for us. And we also know that we cannot support them much further. It's a bit of a mix between the outlier returns, which we of course love, and some of that medium return, which is great as we are only a pre-seed fund. We'll understand we will not be able to support them until pre-IPO rounds, right? So that's a bit the dynamic that we're looking at. By doing multiple bets and supporting them really on their journey, we know that the success rate is a lot higher, and we can quantify the results of what they're doing and follow on with a bigger ticket sum.
Okay. Yeah, that makes perfect sense as well. Yeah.
Yeah, maybe a good example of that is a company called Tractor Junction, which was a team of let's say tractor nerds in India who are so passionate about helping farmers make a better practice with the machinery that they have around them or in the farm, making them last longer. And then slowly pivoted towards a financing model and a marketplace for secondhand tractors and other types of machinery, and even a ranking in terms of what are the quality products out there, what are quality customers, so that they have this whole credit score lined out. We initially invested in 2019 when they weren't yet sure what their product would look like. Then at some point they pivoted towards this model. They raised some additional capital, and they just recently raised actually a very large later stage funding from Astonor Ventures, my old employer, helping them scale even further. And this is one of those companies where we kept reinvesting and we're really supportive of the journey they're on. Now we've passed the baton to the next investor, but we're still very much supportive and on their side since all the way back to 2019. So we're okay with that kind of timeline as well, when we see a good upside potential.
And I'm actually curious about your insights into any secondary markets for early pre-seed investors in agri-food tech, because it sounds like you mentioned a few times you're not going to continue putting money into a company as it gets to pre-IPO. Is just there's too much dilution, and also amount of funds that we're talking about reserves just is not going to be there. So, do you guys look to liquidate position of the Series A or Series B? Is that, and there's a secondary that's functional, or do you hold on and just to take liquidation?
I speak with founders raising every day,
and they're all telling me the same thing. It's harder than ever to find investors who are actually deploying, and getting access to those leads takes time founders just don't have. Every month fundraising is a month burning runway. This is why we created FTW Plus, a community of founders actively fundraising, the world's most accurate agri-food tech investor database, plus connecting you directly to ideal target investors and a community of support and accountability. Guaranteed results or your money back. Apply today at www.joinftw.com/hub.
Yeah, I think it's an interesting question, Alex. I think for us, I mean, we're here to support founders, and we do that the best we can. Exits, I don't think you can always push exits to happen. We're not looking to do secondaries for secondary sake. That's not the way we work. As I said, we're happy to stay in a company and support them along the way. What I do see in agriculture is there's a good reason for companies to also work with corporates, for example, and help them be more engaged with companies, and maybe they would like to be even more involved. And then for us, it's an interesting moment to rediscuss what the next stages would be and what the added value of everyone around the table should be. So there are sometimes opportunities where we like to take that opportunity and help the company to go to the next stage of development, maybe in a more integrated way. But so for us, there are several paths to return for the fund, and we're happy to take advantage of each of them.
Yeah. So there's an openness, but typically, you're just seeing what's best for the founder in that moment, either to hold a position or to potentially expand the position of an investor coming in.
Absolutely, absolutely. We're on the side of the founders. Yes.
Where does non-dilutive funding, especially in Europe, fit in, and how do you support that? Because Europe is very interesting in that function. I think United States, like countries like Israel, Europe, we're starting to see like specifically in Italy is quite interesting. Much more. Finland has programs. Like, is that part of your consideration when you're making a deployment? That you're also looking at, I would say, like creative funding for alternative funding for those companies and as a path for them to scale?
Alex, that's an interesting point because to me, non-dilutive funding is sometimes a bit of a blessing in disguise. We are a venture capital firm, so what we want is companies to scale business and scale their business fast, right? And grants can be a great support of some of the businesses, especially if you need capex. Still, you want that funded by maybe non-dilutive capital where you can. But we don't want companies that move sideways because they're moving from grant to grant and they're actually not developing their product or their market, right? So it's good and bad in the same way. For us, as I said, we also want to be the professional capital coming in. That can be alongside non-dilutive capital, of course. But some companies have too many options for non-dilutive capital, making them lose track of their actual business. And that's why for us, it's more important to have your plan clear in your mind. Where do you want to go? What is the kind of partner you want around the table? Do you want to be a team of people that focuses on getting grants in the company, or do you want to have a team who knows all about the market, who knows all about pricing, who knows all about marketing your products? And the latter would be our focus. So we really want a business-minded around the table and make use of that non-dilutive capital when you can.
Yeah, I think that's clarifying, and it makes a lot of sense that those grants often cost more than they give back from a time of the founder or the team, and can push them in the direction they actually, from a financial standpoint, doesn't make sense. Yeah, less two questions. You've been in the space for a long time. You've seen quite a few different use cases already. What's making you optimistic about the space? Because one of the challenges people have shared is that we don't really have a lot of examples of exits where the model has been, proven out. And I'll say that, the top challenges we're seeing, look, you're dealing in an industry which is by and large low margin. You're dealing with an industry where individuals are not willing to, also like farmers not willing to pay or do cover upfront costs for products. You have seasonality, so it takes a long time to learn from one use case, effectiveness of landing and expanding. Like, there's a lot of fundamental challenges that seem to be not aligned with the VC model. So what makes you optimistic about specifically agriculture as an asset class?
Yeah, that's a question we get a lot, of course, is this an asset class? What people tend to forget maybe on that journey is that Some of the largest companies, of course, are revolving around agriculture and food. People need to eat. We have a growing population and we need to feed the people. This is not an old slogan that I take from somewhere. This is real. So we have still an opportunity to build super large companies in this space. And there's a necessity as well to adapt to all the El Ninos and the fertilizer shocks and the European resilience that people talk about. I think there are a lot of headwinds actually to make some of the changes that are needed in agriculture. And we have an opportunity to build real businesses. There have been exits. There have been exits in biologicals, pesticides. There have been exits in other types of businesses. Robotics is really coming up. Of course, in nutrition, with everything around the GLP-1 hype, I think there will be more focus on personalized nutrition, better for you foods. And I think there are lots of opportunities that we're still building. Agriculture is indeed an industry that is not known for its innovation. At the same time, I think also in governments, people realize that they need stable governance to create more opportunity for farmers to adapt and for companies to stay relevant in this market. Which means opportunities in the short and in the long term for Agtech. And I'm really happy to be building with the portfolio companies who all actually have businesses. This is not just a marketing play. Especially in the early stages of investing where we are, there's a huge opportunity to build very meaningful companies from the ground up. So I'm very, very optimistic. And day-to-day exchanges with the founders, it helps me stay grounded, but also very optimistic of building stuff together. So I love that.
Amazing. Yeah. And I just, one thing that I find challenging is that, for example, when I was in chocolate space, I went into Cargill and I saw their cocoa butter factory, and you see there's no people there. It's operating 24/7. It's highly efficient. Like the food industry is pretty efficient. There's quite a lot of optimization that's been done on bringing down the cost of production. Like slaughterhouse, pretty efficient, right? The way that we've continuously growing animals and breeding food. Like, is there a certain area that you think there's a lot of gap and opportunity that you're specifically looking? It sounds like GLP-1 is for sure something personal. Physical AI is something that you probably around maybe specialized crops is really interesting. Anything else? The buckets, like I actually see there's an opportunity here in a big way.
Yeah, for sure. And I think, by the way, I like your slaughterhouse example. It's super efficient. At the same time, we have Flow Vision in our portfolio who is helping slaughterhouses to automate their processes even further, making it more precise as well. Not just automated, but also more precise. So you get better meat and better pieces out of your animal. So there is still opportunity to make even those very efficient processes even better. Reducing waste out of the systems, getting waste, maybe cold waste streams, maybe cold side streams into the food process again. People think that most of that's already being done by bringing it to animal feed, but I think there are still for circular products, for getting more local production. We see, as I said, the shocks around, for example, fertilizer and Europe having an idea of we want to become more resilient to these shocks. I think there is a lot of opportunity to be building in Europe and building around automation, around using less labor. Who wants to start a farm? I don't know that many people who want to start a farm, but the people who do are looking to integrate new technologies in their operations to be able to be cost effective, but also sustainable in the long term. And as I said, human health, I think we've only grasped the surface of what is possible to create personalized nutrition with better fiber intake, with more meaningful space. And there's opportunity to integrate that into the large companies. We have to be focused on reducing cost, but now can improve that by getting better ingredients into their efficient processes. So I still see a lot of opportunities in this.
Yeah, so I think a lot of our listeners are going to get a sense of, okay, this is really the opportunities that you're looking at. There's the gaps here. And thank you again for just sharing your vision, how you see the process, the opportunity, why you're excited personally about the space, and excited next time for us to have chocolates together.
Looking forward to it, Alec.
One more thing, don't close this episode yet. If you got value from this conversation, here's what I need from you. A 5-star rating, 1 comment, 20 seconds of your time. That's the deal. A 5-star rating means more founders find this content, and every time a founder raises, all boats are elevated. Every week, I pick one random comment and send that person a complimentary copy of Investment Climate, the book. 50 sales playbooks from founders who actually raise money during the fundraising winter. Real strategies, real closes, real numbers, not theory. So if you want a copy, comment below. And if you haven't followed the show yet, do that too. And if there's a guest you want us to bring on the show, just drop us a note or send us an email. We'll read each and every one. Until then, keep on raising.